This is Matthew Cratter from Trader University, and today I want to talk about Russia and the end of the US dollar system. Obviously, we now have the Russian invasion of the Ukraine, and what we've been talking about for the past few days is this idea of economics being upstream to politics. And what I've been asserting is that we're witnessing the unraveling of the US dollar system, and that it's important to view this latest conflict in that context. So for the last 40, 50, 60 years, the US has dominated the world with its military, but that power and that projection of power has definitely been weakening over the past decade with the withdrawal from Afghanistan, and now seeing what's happening in Ukraine and how really powerless the US is to do anything significant about it. So the US exerts its control both through its military and through the US dollar having this global reserve status. I talked about this a couple days ago in this video on the war on the US dollar. And one of the things we noticed is that there have been a lot of steps, especially by potential new superpowers like China and Russia, to avoid using US dollars and to find ways to work around the petrodollar system. So even as early as 2018, China was starting to pay for their oil using their own currency. We just had this news recently where Russia and China agreed to a 30-year natural gas deal with a new pipeline. And the very significant thing about this is that it was all going to settle in euros, not in US dollars, as energy trade has normally been in US dollars really since the early 1970s. If you're finding this video helpful so far, please hit that subscribe and like button. So what we're seeing now with Russia invading the Ukraine, we're seeing China refusing to condemn this move and really siding with Russia as they've been encouraging greater cooperation with each other, as we saw with the pipeline as well. Even the Saudis are getting in on this, siding with Russia and refusing to pump more oil to try to keep oil prices down. And as we pointed out a couple days ago, the Saudis are now the largest supplier as well of crude oil to China. Meanwhile, Russia has been preparing for this moment for many years. They've been dumping their holdings of U.S. government bonds, also known as US Treasuries. They used to have somewhere like $100 billion worth of them. They sold them off sharply in 2018, and now they're down to just call it $3-4 billion worth of treasuries. They hold fewer US Treasuries than even a country like Portugal or Austria or some of these other even much smaller countries. And they've really tried to move their foreign exchange reserves away from US dollars to other currencies like the euro, for example, and the yuan, the renminbi as well. So this is a chart of Russia for foreign exchange reserves. They've been stockpiling really since the bottom in 2015. So they're quite prepared for this in terms of having a lot of currencies on hand, not being short any currencies. They've also been stockpiling gold, which really should be counted as part of their reserves. And this helps to explain a really interesting phenomenon that we've been seeing this year that sort of puzzled me. Normally when real rates are rising, when real interest rates are rising, real interest rates are just the nominal interest rate minus the inflation rate. The Fed has obviously been very hawkish, and as they've been pushing real interest rates up, instead of falling gold prices as we would normally see, we've been seeing gold prices rising this year. Now we really know the reason for this. The gold market was sniffing out this geopolitical disaster waiting to happen. Gold was up sharply this morning. Looks like it's being sold into this rally. So we'll see what happens there. But it is very unusual for gold to be this strong in the face of higher real rates. We're seeing Bitcoin trading more like a risk asset, trading more like a tech stock or some other risk asset selling off in this environment, rather than seeing this as a negative. I would say I see this as a sign of just how early we are, where people don't realize that the real flight to safety should not be to US Treasuries, but it should be to the least risky asset out there, which the world will eventually discover is Bitcoin. On a similar note, there's now there are now murmurings that Russia will be kicked off of the SWIFT system. For those of you not familiar with this, this stands for the Society for Worldwide Interbank Financial Telecommunication, and it's the main messaging system that's used to facilitate the transfer of funds between banks all over the world, and especially in Europe, where it's based. The headquarters are in Belgium. The SWIFT network is basically a global network for US dollars. And so this is one of the ironies we see here. The Baltic foreign ministers are calling to kick Russia out of the SWIFT payment system. If you do kick Russia out of SWIFT, you end up hurting Russia to some extent, but you also, the great irony is you also further accelerate the demise of the US dollar system. When you kick nodes out of a network, it weakens the network. So this is the really paradoxical and ironic thing. If Russia ends up being kicked out of the SWIFT system, obviously Russia was aware of this risk. That's why they've been moving away from US dollars, moving away from US Treasuries as a reserve asset, and moving towards gold, possibly Bitcoin as well. There are a lot of rumors that Putin has significant holdings of Bitcoin. So you have this very strange, the US is in a very strange and a very weak position here, as is Europe. Europe cannot live without Russian oil and natural gas. They will freeze in the winter, or they'll have just tremendous energy price inflation. US and most of the world cannot live without Chinese manufacturing. So you really have a sort of trilemma here, everyone pointing their guns at each other. But I would say that the US, in this case, appears to have the worst hand at the table. There's been a lot of talk this morning about Putin threatening possibly to use nuclear weapons against any country that intervenes and tries to defend Ukraine. I think there's a really interesting comment that I want to end on here from Harold Malmgren, who's the consummate Washington, D.C. insider. He's worked closely with presidents since President JFK, John F. Kennedy, and he believes that Putin is referring to cyber attacks, which we could see, as well as DEW, directed energy warfare, where you basically shut down. I don't know if this would be an EMP attack or some other wave attack. I have to research it, but you would basically fry the energy system, you'd fry the electrical system, you'd fry the computers or server farms or something like this in a particular area. So we will see how this plays out. It's obviously a very unstable situation. It's best probably to be on the sidelines in this kind of environment. Don't be trying to trade. This is definitely a big wave environment meant for the big wave surfers. I'm definitely on the sidelines, and I still have my limit orders in to buy Bitcoin if and when it heads lower. I'd put in a buy ladder at 40,000, 35,000, 30,000, 25,000, and 20,000, buying equal US dollar amounts in addition to try sort of daily dollar cost averaging into Bitcoin as well, and just converting US dollars to Bitcoin whenever I have the chance. So I think this will be very interesting to see how it plays out, and stay tuned for that. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video, and let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.